welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Thanks for joining me today, as always. Today, we're talking about S-Corps. What is an S-Corp and how do you set one up? So if you're a small business owner or you're self-employed, you might have heard about this thing called an S-Corporation, which is people call it S-Corp for short. So maybe, a friend mentioned they saved money on taxes after switching to one, or maybe your accountant might have suggested it, or you've seen some things online. S-Corps can have some significant tax advantages, but they also come with some rules, some responsibilities, some deadlines. I often say, I've heard other tax professionals I work with say, an S-Corp is a privilege. You've got to really understand it and be willing to be responsible with it. So we're going to talk about what it is, how it works, how to set one up, a few ins and outs. So what is an S-Corp? So first thing to note is an S-Corp is not a business entity in itself. It is a tax election. So when you create a business, you typically set the business up as something like a limited liability company, which is an LLC, or a C corporation, and these are done at the state level. And if your business meets certain criteria, you can choose to be taxed as an S-Corp by filing Form 2553 with the IRS. So the S-Corp designation allows your business to avoid double taxation. It's a pass-through entity just like an LLC. But unlike a sole proprietorship or a partnership, an S-Corp can also reduce the amount of income subject to self-employment tax. So why would you choose an S-Corp status? The biggest draw of the S-Corp is the potential to save on taxes. So when you operate as a sole proprietor or an LLC taxed as a sole proprietorship, all your business profits are subject to self-employment tax, which is currently 15.3%. And this covers Social Security and Medicare taxes. But with an S-Corp, you're required to pay yourself a reasonable salary, which is subject to those payroll taxes. And any remaining profit can be distributed as dividends, which are not subject to self-employment tax. And so that can result in significant tax savings, especially for high-income business owners. Those dividends are simply direct payments transferred from your business account to your personal account. That said, reasonable salary is a legal requirement, and the IRS does care about this, so your salary really should reflect what someone in your industry and role would earn. So who qualifies for S-Corp status? So not every business can become an S-Corp. The IRS has specific eligibility requirements. You must be a domestic corporation or an LLC. You can have no more than 100 shareholders. Shareholders must be U.S. citizens or residents, and these can't be partnerships, corporations, or non-resident aliens. They have to be individual people that are U.S. citizens or residents, and you can only issue one class of stock. So if your business meets those criteria, you're probably eligible to elect S-Corp status. So how do you set up an S-Corp? So here's how to go from business idea to S-Corp, kind of start to finish as a quick list. So first, form your business entity. The first step is to form a legal business entity at the state level. Typically, it's going to be an LLC or a C Corp. This involves filing documents with your Secretary of State. These are your formation documents. You want to choose a unique business name. You got to pay your filing fees and designate a registered agent to receive correspondence. So in many cases, forming an LLC is the simpler and more flexible route because you can later elect S-Corp status with the IRS. So a lot of times I tell people, hey, if you're starting a business, just make an LLC, and then later you can elect that S-Corp status when it makes sense for you. Next, obtain an EIN, which is an employer identification number. You get this from the IRS. It is free, just takes a few minutes, and you do that on the IRS website. You can Google Get EIN and make sure it's an IRS website you're linking to. And you can do it again online. It's free, very simple. Next, you elect S-Corp status with the IRS. So whether you're doing this immediately or later, you want to be sure you're filing Form 2553, which is called election by a small business or corporation. And that form has to be filed within 2 months and 15 days after the beginning of the tax year in which the election is taking effect, or at any time during the tax year prior to the year the election is taking effect. So if you want to become an S-Corp in 2025, as of this date, which is in June, it's too late for that. But you can become an S-Corp in 2026 because you can file anytime prior to that year. So if you miss the deadline, you still might be able to request late election relief, but it's kind of a hassle. So it's best to kind of do it on the right schedule. All right, next, you've got to set up payroll and compensation. So once you're an S-Corp, the IRS requires that you pay yourself a reasonable salary. That means setting up payroll, withholding income and payroll taxes, and issuing W-2s. That's a really important part of being compliant as an S-Corp. And you'll likely want to use a payroll provider to handle this. You want to be sure you set up payroll through a proper payroll platform. They do all the filings. It's all taken care of. And again, that reasonable salary is really important. Also, next, keep clean financial records. You want to keep separate personal and business finances, keep accurate books, file the correct tax forms. An S-Corp, files a tax return called an 1120S, and it issues a Schedule K1 to each shareholder. That shows their share of the company's income. So if you're the only owner, you'll get the K1 that has all the income. If you have a partnership, though, that's taxed as an S-Corp, each partner will get a K1 for their share of the income. So many business owners choose to work with a tax pro or a bookkeeper to make sure this is done right. So be sure you get professional help with this. All right, so what about ongoing responsibilities? So the S-Corp does offer tax advantages. It does come also with some administrative work. So you want to make sure you keep annual corporate tax records and a corporate tax return. That's your 1120S. You want to pay yourself reasonable salary with payroll, reporting tax and withholding, and state compliance, any annual reports, any franchise taxes if applicable to you. Make sure your books are accurate and document distributions that you've made to yourself as dividends. So if you don't do these things properly, it could result in penalties, or your S-Corp status could even be revoked. So we don't want that to happen, obviously. All right, so is an S-Corp right for you? An S-Corp can be smart if your business earns more than you need to pay yourself as a salary. It's kind of one of the big tests there. So if your reasonable salary ends up being, let's say, $100,000, and your business is earning $200,000 in profit, then it probably makes sense, because that other part of the income can be taken as dividends or distributions, which can avoid those payroll taxes. But if your reasonable salary is $75,000 and your business profit is only $80,000, that's obviously not going to be worth it, because you're not really saving anything in taxes, especially when you add on things like payroll costs, administrative costs, S-Corp tax return, filing fees, so all that stuff. If you're paying a lot in self-employment taxes, that could be a signal to take a look at it. Also, you want to make sure you're organized and able to keep up with the administrative requirements, or have professionals to help you. That can also make it smart to be an S-Corp. It's not always the best option for new businesses or low-income businesses where the savings don't outweigh the extra complexity. So a big note here, I've got a soapbox on this. I've seen a lot of business owners elect to become an S-Corp because they saw all sorts of information online telling them they can save a lot on taxes. And many of these business owners would be better served by keeping their Schedule C tax status as an LLC and just keeping it simple. There are lots of businesses I've seen that have elected S-Corp status and now have a lot more hassle to deal with, and they aren't saving much or even anything on taxes. They just kind of saw something on social media that said, oh, be an S-Corp, it's magical. Additionally, some of the advice you see, especially online, telling people to become an S-Corp assumes an artificially low salary, which can open you up to audit risk. So some of these, TikTok and Instagram and social media influencers will say, oh, become an S-Corp, it's magical, it saves a ton on taxes. And they say, oh, just pay yourself, $25,000 in salary and the rest can be distributions. That's an artificially low salary a lot of times. And they're basically kind of proposing those savings based on that artificially low salary, which is going to be very risky. So keep that in mind. Analyze your situation very carefully. And the bottom line is, think carefully before becoming an S-Corp and get professional advice before making the change. All right, so wrapping up, the S-Corp election can be effective in reducing tax liability, especially if you're a growing business making more money, but it's not for everyone. But when used correctly, it can unlock potentially thousands in tax savings every year if it makes sense for you. So keep that in mind. And as always, you're welcome to reach out if you have questions. My website is elevationfinancial.com. You can send me a message there. You can find me on social media, or better yet, if you want to just ask a few questions directly, or maybe even consider becoming a client, book a free consultation online, and we can chat about anything on your mind. All right. Thanks, everyone, for joining me today. Have a great day. We will see you next time.